Alright, for this video I want to go through the IRS's Form 7206, which is used to calculate the amount of your self-employed health insurance deduction. So this is being included with the Form 1040 for John Smith. So we've got the 7206 here, and it is part of his full 1040, so we'll go through all of this and all the schedules and forms that are required. And then I do have one slide here covering some background on the self-employed health insurance deduction, this form, and then details on the fact pattern. So the deduction is generally going to be limited to your net earnings from self-employment that are attributed to the trade or business where your health insurance plan was established. And that's important, as we'll see in this example, because you have to separately calculate the amount of self-employed income if you have multiple businesses where you're generating that self-employed earnings. So the self-employed health insurance deduction, this applies to sole proprietors, right? So if you are filling out a Schedule C on your Form 1040, if you're a partner in a partnership, so all that information would be reported on Schedule K1 from a Form 1065. Or the self-employed health insurance applies to S corporation shareholders, right? So if you are a greater than 2% shareholder in an S corp, you'll have this information reported to you on the 1120S Schedule K1, and you'll get a Form W2. Right, so shareholders in an S corporation do receive a W2 as an employee, but when they calculate their insurance deduction for health insurance, they're treated as if they're self-employed, so very similar to partners in a partnership. Now, the deductible amount ultimately of your self-employed health insurance premiums is ultimately going to go on Schedule 1, but we have to complete the 7206 first to figure out what gets reported on Schedule 1, Part 2, line 17. All right, so let's have a look at the fact pattern, and then we'll start getting into the return. So in our fact pattern here, we have John Smith. He is a managing member of a consulting business, and that business is taxed as a partnership. So John gets a Schedule K1 that shows line 1, ordinary income or loss of $75,600. Line 4A, which is guaranteed payments for services, shows $12,000. And then in line 13, box M, amounts paid for medical insurance, we have the same $12,000 figure. And this is because the guaranteed payments consist solely of those health insurance premiums. So John wasn't paid any other guaranteed payments for the year. This just represents the self-employed health insurance premiums that the company paid on his behalf. Now, if we have a look at the 1040 to see how all that was entered, when we're talking about partnerships and S corps, that info is reported on Schedule E, Part 2. So if we look at Schedule E here for the consulting group, LLC, the partnership, we'll see here on row 8, we have non-passive income of $87,600. So that's the line 1 ordinary income plus the guaranteed payment amount, which is $87,600. All right. Now, if we go back to the fact pattern here, continue going through this. So John also has a separate single-member disregarded LLC where he operates a part-time marketing business. So the Schedule C shows income of $8,500, expenses of $2,500, and a net profit of $6,000. So if we look at John's Schedule C here for his marketing business, we'll see that the revenues $8,500. Total expenses are $2,500, and so the net profit or loss from this venture is $6,000. So he's got self-employed income from the partnership and self-employed income coming through from the Schedule C. All right, so John needs to do the 7206 to report the self-employed health insurance premiums, the net earnings from both of these ventures, and then calculate the deductible portion of the self-employment taxes, and then ultimately how much of our health insurance premiums can we deduct. So if we go back to the return, let's start looking at the 7206. So the 7206 form at the top, line 1, is where we enter the amount of health insurance premiums paid under the business. So we have the $12,000 figure there, right, for 2023. And they do have some notes here about any adjustments that you might have to make, what's not included. Right, so we didn't have any payments for qualified long-term care insurance, right? This is just health insurance of $12,000. All right, so assuming no adjustments there on lines 2, we just have the same $12,000 figure there on line 3. Now on item 4, it asks us we need to enter our net profit from the trader business under where the insurance plan was established. So line 4 is going to be that net profit just from the partnership. So there's that $87,600 figure, right? So the $87,600 in net profit attributed just to the partnership. We're not including the $6,000 in net profit from the Schedule C business. On line 5, you do consolidate all those items now. So we've got the $87,600 plus $6,000 in net profit from Schedule C, which gives us a total of $93,600 in net profits from all of those self-employed trades or business. And so that number reconciles with what we have on the Schedule SE. So Schedule SE is where we calculate the amount of self-employment tax, the deductible amount of self-employment tax. And so you can see here we have the same number, line 2, for $93,600. All right, so now that we have lines 4 and 5 completed, line 6 is the ratio, right? So divide line 4 by line 5, and we get 93.59%. We need this figure because we're trying to figure out the proportion of the net profits from this trader business where the insurance plan was established over all of our self-employed income from the other trades or businesses. And then we use that ratio to then figure out what portion is attributed to the trader business where the health insurance plan was established from the deductible part of the tax. So if we look at line 7, it's asking us here multiply Schedule 1, line 15, which is the deductible part of the SE tax by the percentage on line 6. So if we look at Schedule SE towards the bottom here, after we calculate all the amount of self-employed tax imposed, the deductible part of the self-employment tax that's assessed on all of the income, right, from the partnership and the Schedule C business for self-employed earnings is $66.13. So that figure is reported as deductible deductible portion of the self-employment tax on line 15. So we have $6,613, and we need to now multiply that amount by the ratio here on line 6. So we multiply this by 93.59%, and we're left with $6,189. So on line 7, we report $6,189. Line 8 asks us to subtract line 7 from line 4 above. And so we're left with $81,411. Now, line 9, we don't have any contributions to any kind of retirement plans, so that's left blank. Line 11, we're not an S corporation, right? This is a partnership, and we have sole proprietor income, so we don't have a W-2 with any Medicare wages. So you would complete this line item if you were doing this for an S corporation shareholder, but in our case, we have a partnership, so we are not. Line 12, enter any amount from the 2555, so that's a foreign earned income exclusion. We're not completing that. We don't live abroad, so we're not an expat with foreign earnings. So at the bottom here, we've got line 13, $81,411. And so the amount of the deduction here on line 14 is the smaller of line 3 or line 13. Well, line 3 is $12,000, line 13 is $81,411, so the lesser amount is going to be this $12,000 figure. So once we have the $12,000 figure, that self-employed health insurance deduction is reported on Schedule 1. So if we go down to Schedule 1, Part 2, Adjustments to Income, we have the SE health insurance deduction of $12,000. Alright, so that covers it for this tutorial. Hope that was helpful. If you have any questions, feel free to leave a comment below. And as always, I look forward to seeing you again on the next video. Thank you.